Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of corporate filings so you don't have to. Today, we're diving into Bright Green Corporation's latest report. It looks like things are getting a little too green for this company, if you catch my drift. We'll be looking at why they're in a bit of a bind and what their plan is to get out of it, or at least try to. Bright Green Corporation, a company in the, shall we say, budding industry of legal cannabis, has filed a report called an 8K about some pretty big changes. In short, they are trying to reorganize their finances through a Chapter 11 bankruptcy plan. This means they are trying to restructure their debt and keep the company running, but under the protection of the Bankruptcy Court. Think of it like a financial reset button, but with a lot of legal oversight. The clock started ticking for this report around mid-March of 2025. This is when they officially started putting their plan into action. The company we are looking at today is Bright Green Corporation. They're incorporated in Delaware, which is a pretty common choice for companies because of its business-friendly laws. If you're looking to trade their stock, you will find it under the ticker symbol BGXX on the Nasdaq. However, as we will see, trading in their securities might be riskier than usual right now. Just a quick note, this filing isn't meant to be used as some sort of marketing material. It's purely for informing investors about significant events. Their main security is common stock trading on the Nasdaq. Bright Green considers itself an emerging growth company. This means they get some breaks on certain regulations, giving them a bit more flexibility as they try to grow. Now let's get to the meat of the matter. This section is all about sharing important information with everyone at the same time, so no one gets an unfair advantage. It's called Regulation Fair Disclosure, or FD for short. The big news is that Bright Green filed for Chapter 11 bankruptcy back in February of 2025. They are trying to reorganize their debts and keep the business running. This is a pretty serious step, and it means the company is facing some significant financial challenges. In March, they put forward a plan called the Proposed Plan for how they will get back on their feet. Along with that plan, they released a proposed disclosure statement which gives more details about the plan, the company's problems, and what might happen next. It's important to remember that this plan is not a done deal. The bankruptcy court has to approve it, and there's no guarantee that will happen. The company is hoping to get its creditors to agree to the plan, but there are no guarantees. Keep in mind that the details of this plan could change. The company might make updates or changes based on what happens in court or in negotiations with creditors, so don't take anything as set in stone. If you are really interested in all the nitty-gritty details, you can find copies of the proposed plan and the proposed disclosure statement attached to this report. But be warned, it's a lot of legal and financial jargon. Around the same time, in late March, the company also put out a press release to tell everyone about their plan. This is a legal disclaimer basically saying that this information is not necessarily going to be used for all legal purposes, and the company cannot be sued over it. Here's a very important warning. Trading Bright Green's stock right now is super risky. The price of the stock might not have anything to do with what the company is actually worth or what investors might get back in the bankruptcy case. So if you are thinking about buying or selling their stock, be very, very careful. As with any company report, there are a lot of forward-looking statements. These are basically guesses about what will happen in the future. The company is saying that these guesses might not be right and things could change. They talk about risks and uncertainties, including the bankruptcy case itself, the economy, and what their competitors are doing. Anything could happen, so don't take their predictions as guarantees. The company lists some factors that could make things turn out differently than they expect. These include decisions by the bankruptcy court, negotiations with creditors, and changes in the economy. If you want to dig even deeper, you can check out the risk factors section in their annual report, which was filed earlier in the year. Finally, this section lists all the documents that are attached to the report, like the reorganization plan and the press release. The report is signed by Lynn Stockwell, the CEO of Bright Green Corporation, which means she's taking responsibility for what's in it. Now let's step back and take a look at the big picture here. Bright Green is in a tough spot. Filing for bankruptcy is never a good sign, and it means the company has some serious financial problems. The legal cannabis industry is still relatively new and can be unpredictable, and Bright Green seems to be struggling to navigate it. The risks are clear. The company might not be able to get its reorganization plan approved, and even if it does, there's no guarantee it will be successful. Trading in their stock is extremely risky and investors could lose a lot of money. However, there are also some opportunities. If Bright Green can get its finances in order, it could potentially become a successful player in the legal cannabis market. The industry is growing and there's still a lot of potential for companies that can get it right. Overall, Bright Green is a high risk, high reward situation. Investors need to be very careful and do their homework before putting any money into this company. Thanks for watching Corporate Decoder. If you found this breakdown helpful, please hit that like button, leave a comment with your thoughts, and subscribe for more corporate deep dives. Until next time, stay informed and invest wisely, or maybe don't invest at all in this case.